Hello there, welcome to Trade of the Week with me, Katie Pilbeam, and our in-house analyst, Josh Mahony. Now, last week, well, you were pretty confident actually, weren't you, that this currency pair was going to decline, and actually it played out pretty well.
Yeah, it's worked out a treat, actually. So essentially, the wider picture was this big trend line that we're talking about, and it's lasted for years, multi-years. There we go. Going back to 2013. So essentially, the idea was that we were going to get a reversal at that level, and despite the fact that we kept kind of coming back to near the stop, it was holding out pretty well, and ultimately it's starting to turn lower now. So yes, if we look at the daily time frame, we can see that we've got this big deterioration today, and this is really in spite of the fact that actually the US dollar weakened quite heavily earlier in the week because of those FOMC minutes. So you would think that this would actually rally. The fact that we've seen the Aussie dollar almost weaker than the US dollar on that occasion points towards being set up for further downside. So we have seen a nice move lower. We're around about 100 points lower than we were when we opened the trade last week. I would say that probably makes sense to take some profits here, but I do think we could see some further downside. Again, like I said, look on a weekly time frame. This could be paving the way for a number of weeks of downside rather than just the 1 week. So yeah, it's sort of setting itself up pretty nicely for potential reversal lower, even more so than what we've seen so far this week.
So you could potentially continue with that trade if you wanted to.
Yeah, you could do, and just keep adjusting your stops so you don't necessarily lose everything when it does finally turn higher. So
But let's not do that. Let's do something else.
Let us. So I thought we'd do gold.
Yay!
Yay!
What a timely trade!
I try.
Loving the Olympics, aren't we
Keeping
all?
it topical. Keeping it topical. Because we've got so many golds already, I thought I'd just throw another one on the pile and buy the gold.
Keep on coming.
So, all right. So the weekly time frame looks like this. I've talked about this for months, and essentially we've seen this massive breakout from this huge wedge that lasted years. We finally saw a breakout. Now we're essentially seeing a big move higher. That's a retracement of this big deterioration that we saw throughout 2012, 2013, you name it, it kept going down. But it's going up now, and I think it's going to continue to do so. Certainly, once we broke up above that 1307 and came back and retested that alongside that 200 week SMA, that provided even more clues that actually we could see further upside. And if we look on the daily time frame, you can see that actually so far this week we've been seeing a lot of hesitation, a lot of sort of question marks over it, and not really too much, to be honest. And as such, you know, that could continue. But at the same time, and this has progressed a little bit since I saw it last, we did manage to sell off into the bottom end of this triangle, and you know, if anyone was following the morning TA piece on the 10:30 show, I was talking about the idea of buying it here at 1341 for a move back towards the top end of this. Well, that actually got triggered, and now we're seeing this very bullish candle coming into play. But irrespective of that, I do think that the breakout from this whole pattern is going to be towards the upside anyway. So ultimately, I'd be happy to buy this as long as it doesn't break below this 1336 mark. I think we still stand in good stead to ultimately come back to this 1357 mark. But beyond that, I think the breakout is going to be towards the upside. So I think, you know, you'd essentially be able to say, all right, you could take two positions. One position has a target of just the top end of this pattern, and you'd be able to get, say, a 50% or one-for-one risk to reward on that. And then on the flip side, you have another one that's actually waiting for it to run, and then you can try and get it for the breakout that I think is going to happen towards the upside. So that's my kind of idea. I've got the long-term trend behind me that's lasted all of 2016 so far. We've got this consolidation coming into play, and we've got the fact that we've got ascending bottoms but flatlining tops, and something's got to give, but I think it will give towards the top. So I'm hoping we're going to see a decent rally for gold next week, and hopefully it will come through in the same way that it did for old GB.
Exactly. And any Olympic hurdles that will come in the way? Because you've been very technical so far. What about the macro?
Yeah, well, we've got Jackson's Hole, essentially. And the idea is that we have this inverse relationship between the US dollar and gold. So if you were to see let's say we wanted this to rally, we'd want the US dollar to weaken, right? So if we were to see Janet Yellen come out and strengthen the dollar in any way and essentially say, right, we're definitely going to act in 2016 or something, then that wouldn't necessarily be a good thing. So I would say Jackson Hole is probably going to be the biggest hurdle of the week. Thankfully, that's Friday, so let's hope that she speaks
after we record.
Well, let's hope, yeah.
All right, thank you very much indeed. So you're going for gold in Olympic fashion.
But I'll take a bronze.
Oh, we don't want bronze.
Yeah, well, do you know...
Apparently bronze is more popular than silver.
Really?
Yeah.
Well, apparently a gold medal doesn't even contain that much gold.
Oh, rubbish.
It's all silver.
Well, it's all about the winning anyway. It's not about the medal.
Exactly. It's about the chocolate inside.
Yeah. Ooh. Chocolate and gold. What a show today. All things that I love. OK, thank you very much indeed. So we're going for gold in Olympic fashion. And as it stands, we have 22 as Great Britain. So we're doing rather well, and hopefully we'll get some more over the weekend.